This video will guide you through how VisionWorks, our next-generation life planning software, can take your financial planning business to the highest level.
Thank you for your time today. We're going to be talking about the financial attitudes exercise. When you're creating a financial plan, the exercise is optional. And I just want to remind you, I'm bringing up a retirement plan now, that when you're dealing with a retirement plan, there's no exercise on people's values, there's no inclusion of will, there's no exercise on financial attitudes. In the case, of course, of a retirement and estate plan, there is the will because we look at the estate output and the insurance needs, but again, no values, no financial attitudes. They're kind of extras that give us a more in-depth plan, a better look at what matters to people. And when we're dealing with retirement plans, we're just really focused on the question, will I be okay in retirement? And in the case of a retirement and estate assessment plan, will I be okay in retirement? And will my estate, assets going to children from a previous marriage, have potentially any impact on my surviving partner? On the other hand, when we have a look at a full financial plan, then we have the exercise on values and the exercise on financial attitudes. And at the end of what we're going to talk about today, I'm going to introduce you briefly to what we call the action equation. We're going to be focusing on it next week, so I'm just going to talk briefly about it. But both values and attitudes have a very important impact on one of the major components of the action equation. And again, we'll come back and have a look at it later. It's just those two things really are the most important components in what I'm going to call people's preferences. So let's have a look at the financial attitudes exercise, and we'll run through how it all operates. There is a financial attitudes questionnaire. So I'll bring it up, and like all the questionnaires, it's a PDF file, it has a submit button and so on. You send it out to clients, one for Bill, one for Sue. They each have their own financial attitudes. And then clients simply respond to the different statements, strongly disagree to strongly agree. There are a total of 27 statements, and they distill down to 9 financial attitudes, which is 3 statements per attitude. And then once they've gone through and completed them, then they just click the submit button, and again, an FDF file is attached to an email sent to you. And when that FDF file comes in, of course, what you're going to do is you're going to save it in the client's name and then eventually import it into the software. So in this particular case, I'm using the questionnaire, but you can see when I open the software, it could have been entered directly in this financial attitudes exercise. So let's just go to the import-export page, and I'll remind you how this works. When we're doing the values exercise, the financial attitudes exercise, if we're adding additional parties to the plan, such as children, then what we have to do is with a plan is to just go to import export, click import, select from questionnaire, and then choose the file that we want. So in this case, I'm going to select Bill's FDF file. Remember, there'd be one for Bill and one for Sue. I'll open it up, and then all I need to do is select the party to whom this questionnaire should be imported, and that's Bill. So now I'll just click OK, and then the data is automatically imported in and populates the financial attitudes exercise. What we want to do, though, is we want to have a look at output, and we want to see how this impacts a plan. So I'm going to go to Tactics, Bill, and then you can see I'm automatically on the Financial Attitudes tab. And if I open up the Show Table, or click the Show Table button, I'll open up the table and see Bill's attitudes being populated. Again, you can see that there are 9 attitudes. So the way this table works is very simple. There are 2 columns, and these columns represent the average range for the accountability attitude in this particular case, 43.8 to 77.8. And that average range is based on a national survey we had done, 2,000 respondents, coast to coast, full demographic. And you'll remember I talk about this when we discussed the ideal planning candidate software, because all we did was we took this very extensive study and we extracted from it 3 key attitudes that have to do with people's suitability to planning: accountability, participation, and learning. But when it comes to, and this is sort of qualifying them, should we just be doing a retirement plan for them, or are these people, let's say, with a high accountability score, the results I get in life are up to me, anything that I can do to help me get those results is good to do. Therefore, if planning will help me get the results I want, planning is good to do. So those 3 scores help us screen people and decide what kind of offering to give them, what really would suit them, and also, frankly, suit our business model. So just when it comes to an explanation of these different scores and how they work, I'll remind you that if you click Help, you'll get an overview commentary. And then if you click See also, you'll get instructions on or information about the 9 different attitudes, what they represent. And you'll also get instructions on understanding, how these scores work. But essentially, it's very simple. A client score is entered either into the below average, average, or above average column. Anything in the average column is statistically unimportant. It's only entries in the below average or the above average column that actually mean anything. So we can see in this particular case that Bill's accountability score is high, so we know he's very suited to planning. But if we also want to understand these scores from the context of building a plan, what we can see here is that Bill's work score is actually very high. And what that's telling us is that when helping the client build a plan, we don't just have to look at portfolio returns. We could, for him, investigate his career path. And I mention that because when you look at what you're trying to accomplish, then of course, your career path is very important. So, you're trying to build a business to create wealth so that you can enjoy the life that you want. So that's very common for many clients who are self-employed or, own their own companies. So by the same token, I want to imagine exactly the opposite circumstance where what we're dealing with is a client with a very low work score. And what the client might say is something like the desired retirement age is 58 or 60, whatever it might be. And then when we look at the financial forecast, we see there's a real shortfall. And if we're doing a plan for the client, and in the absence of understanding attitudes, we may very easily say to the client, well, you just won't be able to do that. You're going to have to work till 65, an additional, let's say, 5 years of income, 5 years of savings, and 5 fewer years of drawing down on your retirement resources. But the reality of the client's attitudes, their money behavior, is that they simply don't want to work past 60. So in order to be able to build a plan, we're going to, in that case, have to look at other approaches rather than, relying on that additional career income. So the whole point is to make sure that when we're doing plans, that the plans are ones that truly suit the client. So what I want to do now is to have a look at the results that this table gives us. And we can see the first attitude is accountability. And all it does is it says you acknowledge that your current actions determine your future results. So this isn't giving us any particular insight into, what the client might do to achieve those results. But if we go on and look at the work score and these attitudes, what's displayed here is only an attitude that is either above average or below average. Nothing is displayed if an attitude is within the national average. Again, it's not meaningful. So now we can see that Bill's attitude to work, you're willing to work longer or harder, brings up any career-related entries. We can then click on them, bring up the input panel, make a change, and see what the effect is on the plan. So this gives us an opportunity to explore the impact of a change in Bill's career. Now, in this particular case, he's older, doesn't have many more working years ahead of him. So work isn't perhaps all that relevant as it might be where you have a higher work score for somebody who's much younger. And one of the things we're trying to do, and I think this is very important to remember, is that when we're working with people, we could go to them with a list of 10 to-dos. But many of those to-dos could be what I'm going to call low leverage. They really might not make a significant difference in the plan. You could have two people who have CPP, they could split CPP, but if their CPP amounts are both relatively close to each other, splitting CPP is going to have a relatively marginal difference. Whereas something else might be their career path. When you make a change, it could have a very profound difference. So we really want to make sure that when we're doing to-dos with people, that we're not overwhelming them with, a dozen to-dos, but we're really saying, 9 of these might be are obviously worthwhile, but not overly impactful, whereas 3 of these to-dos are significantly impactful. So we want to make sure that they really understand what they need to do that will really make a difference in the plan, and not too many things, which brings, of course, focus to the plan. So the whole point of this exercise then is to understand that we want to create plans that not only are mathematically sound, but they also suit clients' financial attitudes. If they don't suit them, then plans can easily, gather dust. So I want to take this and talk in terms of relating plans back to, clients and meaningful value. And to do that, I want to bring up the action equation. So we can see here the action equation, and it is action is based on intention, learning, belief, preferences, and confidence. And again, we're going to be talking about this much more next week. But today, the financial attitudes, as I mentioned earlier, are all about preferences, the preferred way of doing things. So the 2 main components of preferences are people's values, what's important to them, and their financial attitudes, their money behavior, how they want to deal with money. So again, if we build a plan where somebody, we're suggesting they need to work till 65, they want to retire at 60, it's not going to suit their work score, that particular financial attitude. It's not going to meet their preferences, and therefore the probabilities of them really getting meaningful value in sticking to their plan are not nearly as high as if we make sure that plans truly suit clients' preferences. So the whole point is that we need to understand people's attitudes to ensure that plans suit their preferences and that they, take action. And what we'll talk about next week is, as I've noted up here at the top, all 5 of these ingredients have to be present, or clients will not commit to meaningful new action and experience lasting change. So I want to emphasize meaningful action and lasting change. Often people will do things and with the best of intentions, but then things kind of slip. So we need to make sure all of these ingredients are very consistent in the plan, and overall, clients feel really enthusiastic about implementing their plan.
Book a demo. We'd be happy to show you more of VisionWorks' incredible features.